of KEC International joining in. Would like you to listen into that interview as well. KEC has secured new orders of around 1,300 crores across various businesses. The company's total order book now stands at 24,000 crores. To understand the execution timeline and the kind of margins that we can see, Vimal Kejriwal, who's the Managing Director and Chief Executive Officer at KEC International, joins us now. Mr. Kejriwal, thanks a lot for joining us. You know, the last time you had said that your margins are under pressure despite having good contracts because your contracts don't allow the cost rise pass through. So that would be a challenging situation, right? Because despite getting fresh orders, if you can't pass the higher costs, then your operational performance will continue to be under pressure. Is that the case even now on the new orders?
So good morning, Sonia. I think what we had been talking about was the old orders which we had taken when the commodity prices were very low. Today, all these orders are coming at current prices, and in many of them, there is price variation. Like in this case, 90% of the orders are from India. And I'll say almost every order has a price variation clause. So it depends upon client to client whether you have a price variation or not. And more or less, I'll say a large part of our fixed orders have either been executed or are now part of the new pricing regime. You know, when aluminum was 3,000 or whatever, so those orders have come at new prices. So now when we execute these orders, the current orders, the margins will start moving up.
Mr. Kejriwal, hi, good morning. By what time? What's the execution time frame for these orders? What kind of margins will you make on these orders?
So, Prashant, these orders would typically be executed between 12 to 15 months. Revenues would start flowing in. Right now it's August, so I'll say by Q3 onwards, the revenues will start flowing in. Margins would typically be 8 to 10%. So overall, as I said in my last interview also, that we expect that from Q3 onwards, you know, the new metal pricing and other things will start hitting the P&L. So the margin should start picking up from Q3 onwards.
Okay. Can you tell us what is the order visibility like over the next 1 to 2 years? And which segments will be the key drivers for you?
So, Sonia, we have a tender pipeline of around 110,000 crores. So, 110,000 crores is our tender pipeline, of which roughly 30,000 crores are already quoted. And 80,000 crores are something which we have to quote over next, I'll say, 2 to 3 months. Half of it is from the T&D sector. And another 40% or so would be from the civil piece, and the balance is from our railway piece.
Okay. You had said earlier that you expect the pain of elevated input prices to continue in Q2. I guess that's the reason the stock has also been under pressure for a while. When you talk about pain, how much could it get, how worse could it get in terms of the margin performance, and when do you see respite?
So Sonia, there are two issues which are there in our margins. One is obviously the metal prices, and the second was that we had some large losses in our Brazil subsidiary on account of we had taken a few large EPC orders, and which because of COVID ran into trouble. Now those orders are more or less getting over. Hopefully they should get over by Q2, max maybe a month after that. But I think by Q2 we should get over. And the old fixed price orders are also, you know, getting over. So hopefully by Q3 the prices and the margin should start rising. I don't see the margins going much below what we had quoted, what we have given in Q1. That's the reason we said from Q2 end or Q3 onwards, we'll start the margins going up.
Mr. Kejriwal, so you said 1,10,000 crores is the total sort of tenders, and 30,000 you've quoted, the rest you're yet to, which you will in the next 2 to 3 months, right?
Absolutely right. Yeah.
Is there any way to, kind of put percentages to what's the win rate like for you in the past? What has it been like? Yeah.
So there are two different things. One is if you go by the numbers, generally what we have seen is 1 out of 6 or 5 we win. Okay. And if you put a percentage, it's around 15-16% is what we normally win. That's the way it has been historically.
Okay. So, 15-20,000 crores. I mean, it's possible that...
Yeah. It's possible.
It's possible.
It's
okay.
possible.
Right. And you'll know this by, this should start to... these projects will be put together and awarded, bulk of these by the end of the year?
See, the ones which you have quoted is around 30,000 will definitely be awarded maybe in Q2 or Q3 itself. The others, some of them may get deferred, but part of it will definitely get awarded before March. Definitely.
Just to on that margin point, you said most of your legacy fixed price contracts are behind you. So can we say over 90% now is sort of pass-through contracts that you have, that you're working on now? Overall, across the order book?
I'll not say that. I think around 20% are still pass-through. 20% are still fixed price contracts. But Prashant, what's happening is the new ones which you have announced, like today what we have announced, are based on current prices or slightly elevated prices which we had quoted maybe a month or two back. So if the metal pricing and other prices remain in the same way without getting elevated too much, then we are very clear that we should be back to our old margin days.
And I think you had said 10%, right? By FY24.
Yeah.
Okay. All right. We'll leave it at that, sir. Thanks a lot for joining us.